Good morning, students. Today we are going to start with the chapter which is cost accounting systems. So first let us understand the concepts under cost accounting systems. So there are two accounting systems we have. One is called the integrated or integral cost accounting system. And the second is called the non-integrated cost accounting system. So when you have non-integrated cost accounting system, the cost accounting system will have separate ledgers where all the costing records will be kept here separately. Whereas when you have the integral system, the cost accounts are prepared using the same set of books. So one set of books is maintained from where the cost accountants prepare their own cost sheets and other accounts, relevant accounts, and the financial accounting people maintain their own accounts. Whereas in non-integrated cost accounting system, there would be two separate accounts books, one for the cost accountants and the other for the financial accountants. So when you have a non-integrated accounting system, therein we generally call that you will have a profit and loss account in finance as well as a costing profit and loss account. So every book is kept separate. Costing profit and loss account is kept separate. So that's why we add the name costing to ensure that this is the one which is kept under non-integrated cost accounting system. So not every organization is so big that it will require a cost accounting system on its own. Therefore, and it is also costly to have a non-integrated cost accounting system. So we have to weigh that whether the organization is big enough to have a non-integrated cost accounting system and the benefits that you have from this outweigh the cost. Now, the third aspect in this chapter is reconciliation. So when there are two separate books of accounts, it is only then the concept of reconciliation will come. So if you have non-integrated cost accounting system, so there is a separate cost accounting and there is a separate financial accounting, then we reconcile the profits of costing and financial profit. Profits are reconciled. Which profits? Costing and financial profits are reconciled. Because both separate books of accounts may give you separate profits. So we should know why there is a difference between cost accounting and profits and why there is a different answer or a different profit exhibited by the financial accounting systems. So this is the main topics which we'll be covering in this chapter. Now, first I'll start with the non-integrated accounting cost accounting system. So under the non-integrated cost accounting system, it's a very easy concept, all about journal entries. So if you have command over that, this chapter will not pose any problem. So non-integrated cost accounting system, we keep separate ledgers. So the first one is the cost ledger. This is a self-balancing ledger. So all the expenses are credited to the cost ledger. And the control accounts are kept for all the subsidiary ledgers. The second is the stores ledger. The third is the work in progress. I'll just write WIP, work in progress. Ledger. And the fourth one is the finished goods ledger. So it is a simple concept that you incur cost. Let's say you have brought material which you will be using. So this material goes to work in stores. What you do with the uh, material that you buy. So generally, you will keep it in the stores. So from stores, it goes to the factory production. So it becomes work in progress. Now here, another cost is applied, wages, which is again a cost which will be applied to the whatever you are producing. Plus overheads would be applied to this. Which type of overheads? Production overheads. You can call it production, manufacturing, works, or factory overheads. Now, once you apply the wages and overheads to the material, this converts into finished goods. So from WIP, it will move to the finished goods account or finished goods ledger. Whatever is complete will move to the finished goods ledger, and whatever is remaining will be the balance in the WIP account. And from finished goods, some of it is sold, so that goes to cost of sales. In this cost of sales, here we apply the administrative and selling and distribution overheads. So another element of cost which is incurred here. And from cost of sales, this goes to the costing profit and loss account. And finally, whatever the sales is achieved is debited to the cost ledger. So this cycle is complete. Now, till here you have the cost of sales and you are crediting the uh, entire cost of sales to the cost ledger and debiting it with the sales. So the difference, which is the profit, should also move from costing P&L to cost ledger control account. Okay. So this is the entire concept of the chapter, from movement of goods from purchasing to storing it in the stores to taking it from stores to the WIP to the production floor. From there, when it complete, it moves to finished goods department. From finished goods, it moves to cost of sales, and cost of sales moves to the costing P&L. And the sales also goes to the costing P&L. Difference gives you the profit, and that profit and sales also is taken to the cost ledger control account. So what are the principal accounts that we have here? The first one is the cost ledger control account. Also known as the general ledger adjustment account. This account is used to complete the double entry, and therefore it is one of the most principal account for the cost accounting system. I'll give an explanation why we have to maintain separate books of accounts for the cost accounts. So cost ledger control account or general ledger adjustment account is the principal account. The second would be the stores ledger control account. The third would be wages control account. So if you look at it, I am using the cost sheet from here. Material is come, wages have come, direct and indirect both. So wages control account will take both direct and indirect wages. After that, you have the work in progress control account. Then you incur the production overheads, production, manufacturing, factory, or works overhead. So generally we will call it production overheads. So now you have incurred production overheads. Once you have incurred production overheads, so you have applied material, labor, or wages and production overheads to your products. So it becomes finished goods. So whatever is there in the work in progress control account and complete moves to the finished goods control account. Then you apply administrative, overheads control account. You also incur selling and distribution overheads. So you have selling and distribution overheads control account. All this moves to cost of sales account. This cost of sales moves to costing profit and loss account. The sales is also credited to the costing P&L account. And this ultimately moves to the cost ledger control account. And the costing profit and loss, also the balance, which is the profit or loss, is also taken to the cost ledger control accounts. So this is how all the accounts are kept in the non-integrated accounting system. I hope this is clear. So you were asking, why do we keep a separate cost accounting system? Some organizations are very large. There is a lot of manufacturing and production, and cost control is important. So that justifies to have a separate cost accounting system altogether, where detailed costing related items are kept. Now, what is the scheme of journal entries in non-integrated cost accounting system? But before that, I'll speak about one concept. Scheme of journal entries is what? The material is purchased first. So whenever you incur, remember that whenever you incur any expenditure, whenever they incur any expenditure from your pocket, it must be credited to the cost ledger control account. So first, you incur an expenditure on material. So you have material control account debit to cost ledger control account. So first entry is that you have purchased raw material. Now, how it is different from integrated system? In financial accounting, so far we have learned that whenever we purchase material, when we purchase it on cash, your journal entry is purchases to cash, and when you purchase it on credit, it is purchases to supplier. Cost accountants are not concerned with whether the payment has been made or not. That is purely a financial thing. Therefore, whether the material is purchased by paying cash or the material is purchased on credit, in both the circumstances, there's only one account that will be credited, which is cost ledger control account. This material is then moved to the stores. So here is the stores ledger control account. Debited to material control account. So whatever the raw material has been purchased is kept in stores for keeping the raw material in stores. Now these two entries can generally be combined when you are doing the non-integrated accounting system, because the material control account will get cancelled here. So you can directly pass a journal entry combining the two. So whenever the raw material is purchased, stores ledger control account debit to cost ledger control. Instead of passing two entries here, we pass one single entry. Stores ledger control account debit to cost ledger control account. Once this is done, now just imagine that there is a warehouse and raw material is kept here. What will not this go to the, what will happen to this raw material which is kept here? This should go to the production. So what do you think should be the entry when this moves to the production? The third entry is work in progress account debit. Okay. So when this moves to the production house, work in progress account, control account debit, and you will credit the stores. Okay, I'll not write it again and again, and I'll just indicate it using dots. So work in progress control account debit to stores ledger. Now, what if some of the material is not going directly to production floor or factory floor for production, but it is used as a overhead, indirect material. Okay? Let's say it is used as a overhead. So first you charge it to production overheads. Control account. And if it is going to as an overhead of administration, it can also be used as a overhead of selling. So wherever it is used, if it is going directly to factory floor for production of finished goods, it goes to the WIP. If it goes to the indirect material used in production, it becomes production overheads. If it moves to the indirect material used as administrative controls overheads, it becomes administrative overheads. And if it is used as indirect material in selling, it becomes selling and distribution overheads. So whatever the overheads, indirect material is issued for overheads is debited and stores is credited. Now, one very important thing is in cost accounting, if you've completed the overheads chapter, you know that overheads are recovered at a predetermined rate. Overheads are recovered at a predetermined rate. Let's say it could be 50% of prime cost. Production overheads are 50% of prime cost or 100% of material cost, whatever it is. So whatever be the absorption rate, what is incurred will be different and what is absorbed or recovered will be different. So you can call it overheads are absorbed or recovered at a predetermined rate, and therefore it is possible that your production overheads incurred are so production overheads incurred are, let's say, 80,000, and recovered is charged to WIP. So work in progress will bear the cost of production overheads. So work in progress control account debit and to production overheads. So this one is production overheads incurred, and this one is production overheads recovered or absorbed. So if this figure is 70,000, you can see that the production overheads have been under recovered. There is under recovery. So what do we do with the under recovery? You can see production overheads are debited with 80, but they are credited with 70. So you can credit the production overheads by additional 10,000. Right? And you can take it to the, if it is abnormal, you can debit it to the costing profit and loss account, which is production overheads under recovered and treated as abnormal. So if they are treated as abnormal, you can take it to the costing profit and loss account. Alternatively, you can create a production overhead adjustment account or a overhead adjustment account as a part of the account. So what happens is sometimes there can be under recovery. Next year, they could be over recovery. So in the long run, they will get automatically adjusted. So if there is a small difference and it is normal, you can keep it to overhead adjustment account, which will bear the under recovery or over recovery. So if there is under recovery, this account will be debited. And if there is over absorption or over recovery, this account will be credited. So overhead adjustment account debit to production overheads or production overheads adjustment account debit to production overheads control account. Right? So we will take costing P&L to production overheads 10,000 and production overhead adjustment account will move to production overhead control account. This is when under recovery is normal. So maybe next time it is over recovery and this account will get automatically settled in the long run. Now this is production overheads incurred. But remember in the previous entry here also, some part of the production overhead was also incurred because indirect material was issued. So let us say this is 15,000. So 15,000 rupees material was used as indirect material as production overheads. So the under recovery is not by 10,000. Total production overheads are now debited by 15 plus 80, 95,000. Out of 95,000, 70,000 is recovered. So therefore, there is a under recovery or under absorption by 25,000. So it's not just the production overhead which is incurred, it is also the indirect material or wages which have been incurred as indirect wages that can also be a part of the production overhead or administration or selling and distribution overheads. Is this clear so far? Moving from stores to production, in that time abnormal loss accrued in the that time journal entry may pass to abnormal loss. Yes. Second one for over recovery. Okay. So uh, this is how the materials will move. Now the material is moving for production. The material is being used as production overhead. It can also be used as administration overheads. It can also be used as selling and distribution overheads. The next important thing is this material may also be returned to the vendor. So if the material is returned to the vendor, this entry is reversed. Cost ledger control account debit and stores ledger. So the goods are moving back from stores to vendor. So stores will be credited. So this is when goods are returned. Similarly, it may be possible that goods are coming back from the factory floor to the stores. In that case, stores will be debited. This entry will be reversed. If goods are returned from factory floor to stores. So reverse this entry. Okay. Now let us take this all through a question. There is a company which operates separate cost accounting and financial accounting systems. Means non-integrated. Following is the list of opening balances as on 1st April in the cost ledger. Now look at the ledgers. The primary ledgers are stores, WIP, finished goods, and general ledger adjustment account or cost ledger control account. So these are the four ledgers. Now you see that the opening balance does not have any overhead adjustment account or overhead control account. Otherwise, you could also have a overhead control account, which can have a debit or a credit balance. Debit balance would mean that there was under recovery in the past. Credit balance would mean that there was over recovery in the past. But here we do not see anything, which means that it may be the policy of the company to take the under recovered or over recovered overheads directly to the costing P&L account, or to apply a supplementary rate. Or it can, maybe there was no over or under recovery at all. So therefore, there is no overhead suspense account or overhead adjustment account. So if in this period, after these transactions, if there is some over absorption or under absorption, you may create the overhead adjustment account also. Or if nothing is said in the question, you can treat it as abnormal and take it to the costing P&L account. Okay. So first transaction is material is purchased. I'll take up the journal entry here simultaneously. What happens when material is purchased? You can pass directly one entry, stores ledger, control account debit, to cost ledger, control account. Here the name is general ledger, so we will use the general ledger adjustment account. So this entry will be passed for this 26,700. Next, what is happening? The material is moving from stores to production. So what is the journal entry for that? WIP control account to stores ledger control account, right? 40,000. So 40,000 of the stores is moving to production. Then here it is said material issued for factory repairs. Factory repairs becomes production overheads or factory overheads. Do we have a name here already? No. So maybe I'll call it production overhead. And yes, here it is production overheads. So this is production overheads to stores, right? So 900 worth of goods is used as production overheads. Then there is factory wages paid, which includes 23,000 as indirect wages and 77,500 is total. So from 77,500, if you will subtract 23,000, so you will have 54,500 as direct wages and 23,000 as indirect wages. So one entry would be wages control account debit to cost ledger control account with 77,500. Out of this, whatever the direct wages are, they will move to WIP, to wages control, work in progress control account, 54,500, and indirect wages is production overheads again. So production overheads to wages control account is 23,000. Now you look at how much is the production overhead so far. Factory repairs 900, that was indirect material issued, and indirect labor 23,000. As well as the production overheads incurred are 95,200. So the general entry for this would be production overheads control account debit to cost ledger control account. So another 95,200 is incurred, production overhead control account debit, cost ledger control account. So total production overheads incurred are, you will add that 3. So it is 900 plus 23,000 plus 95,200. So it becomes 1,19,100. Whereas production overheads under absorbed and written off. So like I said earlier, when I look at the opening balances, I do not see a production overhead adjustment account. So it is possible that any under absorption or over absorption is directly charged to costing P&L. And that is what it is said here. So production overheads under absorbed and written off is 3,200. So it implies that out of 1,19,100, 3,200 was not absorbed. So that means the amount that was recovered was 1,19,100 minus 3,200, which is 1,15,900. So 1,15,900 will be charged to WIP, to production overheads recovered or production overhead control account. So 115,900. And you can see the production overheads are debited by 1,19,100 but credited by 1,15,900. So they need to be further credited, which means your journal entry would be costing P&L account debit to production overhead by 3,200. Okay. And any time when there is under recovery, that means expenses are more than what have been charged so far. So you will debit the profit and loss account. Remembering the rule, debit all expenses and losses and credit all incomes and gains. Finally, you have sales. This sales will also move to cost ledger control account as well as costing P&L account. So 2,56,000 is the sales. I'll first start preparing the accounts here. So you have the stores ledger control account, which has an opening balance of 53,375. 53,375. I'm preparing it in 2T form, writing all the figures, do it properly in exam. Credit amount in rupees. So you already had 53,375 worth of material. Then you purchased 26,700 worth of raw material again. So this was to cost ledger control account. Then you have issued some raw material for production. Some raw material was issued as production overheads, factory repairs. So raw material purchased was 26,700 and factory repairs was 900. Issued to production was 40,000. Okay. So this is all about your stores ledger control account, which says that you had 53,375 already and you purchased another 26,700. So the total raw material that was there was 80,075, out of which 40,000 is used in production and 900 is used as production overheads. So balance carried down is 39,175. So the total is 80,075. Okay. I will mark this. This is the balance of the stores which is remaining with us. The second account is WIP control account. The WIP control account had a balance of 1,04,595 already. And then you have used, material has come here 40,000. Stores. Then you have incurred wages direct. So the direct wages are 54,500. Wages control account 54,500. This entry, WIP control account debit to wages control account. And then there was production overheads charge 1,15,900. So this is all that you have incurred as WIP, 1,04,595 plus 40,000 plus 54,500 plus 1,15,900. So the total WIP or work in progress or total expenditure you had incurred on production is 3,14,995 together with the opening stock. Then you have finished goods control account, which already had a balance of 30,780. How much is 30,780? To balance brought down 30,780. You will always see that the total of these three debits will match the credit of 188,750. And there is sales of 2,56,000. Now, some of the goods must have moved from finished goods to cost of sales. Some of them may have come from WIP. So what is given is the company's gross profit is 25% on factory cost. At the end of the quarter, the WIP stocks increased by 7,500. So what it is telling us that the balance of WIP stocks, so balance carried down, increased by 7,500. So what was the opening balance? You add to that 7,500. So what is the scope of WIP control account? You already have a incomplete goods, which is the opening balance. Then you further issue material to the WIP. You incur wages there and you recover factory overheads or production overheads. From there, some of it moves to finished goods and the balance is the closing stock. So we have the balance of the closing stock here mentioned, which has increased by 7,500 from the opening balance. So 1,04,595 plus 7,500, which means your closing balance is 1,12,095. The total was 314,995, out of which 1,12,095 remains. So the balance must have gone to the finished goods department, which is 2,02,900. This becomes the balancing figure. So finished goods already had 30,780, and now from WIP, another 2,02,900 has come up. So finished goods had your opening balance of finished goods and transferred from WIP 22,02,900. How much is sold? That is not given. But one important information is mentioned here that 25% is the gross profit on factory cost. So what is the total sales? 2,56,000. Here I'll give you one very good clue how to calculate the profits. So you see that it is given 25% on factory cost. Okay. So reduce this to a fraction. It becomes 1 by 4 on cost. 1 by 4 on cost is equivalent to 1 by 5 on sales. So 2,56,000 is the sales, and 1 by 5 of 2,56,000 is your gross profit. So gross profit is 51,200. Therefore, the cost of sales is, or cost of goods sold is 2,56,000 minus 51,200 is equivalent to 2,04,800, right? So this becomes a working note to calculate the cost of goods sold or cost of sales. So cost of sales or cost of goods sold is 2,04,800. You will use the same nomenclature, not different. Remember that. So we have to pass the journal entry and post them accordingly to respective ledgers, right? What is 1,12,095? Okay, 2 lakh. Perfect. Okay. Now look at the finished goods ledger. You already had 30,780. Plus you got another 202,900 from WIP. So the total raw material finished goods stock was 2,33,680. Out of this, 2,04,800 has been sold, which means you should be having a balance carried down of 28,880. Right. If your calculations will be okay, you will end up getting the perfect answers. So we have three closing balances, 1, 2, and 3. Now let's go to cost of sales account. Cost of sales account would be simple. Two finished goods, 2,04,800 by costing P&L. Straight away move the cost of sales to costing P&L, 2,04,800. So this will not have any closing balance. Then you have your costing P&L account. Costing P&L account would be debited by to cost of sales, 2,04,800. And remember, we have not passed one entry here. We have done all the journal entries, but we have not passed one entry. And that is for sales, 2,56,000. So what is the scheme of entries for sales? First is cost ledger control account debit. Two lakh 56,000, and sales will be credited 2,56,000. Where will this sales go? So if you prepare a sales account, it has by cost ledger control account 2,56,000, and this sales should go to costing P&L account. 2,56,000. So sales and cost of sales is simple. Finished cost of sales is debited with finished goods and credited to costing P&L account. And sales account is credited by cost ledger control account and debited to cost ledger costing P&L account. Debit with cost ledger costing P&L. So in costing P&L, you will have by sales 2,56,000, and this should be your profit 51,200. However, remember that there was a under recovery which was written off to the costing P&L account. So we have passed this entry costing P&L to production overheads. So remember to carry this also 3,200 to production overheads under recovered 3,200. Therefore, your profit is the balancing figure, which is 2,56,000 minus 2,04,800 and minus 3,200. So technically it should be 51,200, the gross profit, but because production overheads are there, so to net profit, which will be carried to cost ledger control account. This is 48,000. Right? Now what is left? One very important account is left. Which one? The cost general ledger adjustment account. So since, sorry here, all throughout you will not use the word cost ledger control account, you will use general ledger adjustment account. So let us prepare the general ledger adjustment account. It had a credit balance as opening balance. I'll explain the profit calculation. So it had a opening balance of 188,750. Okay. Now, whenever you have incurred any expenditure, you have credited the general ledger adjustment account. So first you purchased raw material 26,700 by stores ledger 26,700. Then you have incurred wages, direct and indirect. So you have passed the entry wages control account. That was 77,500. Okay. So material is purchased. When it has moved to production, it is just a movement, no expenditure incurred. When this material moves to factory repairs, used as factory repairs, again, no expenditure incurred, only movement of goods from stores to factory overheads. Then you have wages incurred. That is 77,500. That is when the general ledger adjustment account would be credited. So all the expenses you make, you have to credit the general ledger adjustment account. This is to complete the double entry system. Then you have, after factory wages, you have also incurred production overheads, 95,200. And then next two entries are just production overheads absorbed and unabsorbed. And then there is sales. So 95,200 by production overheads. Next entry was production overheads written off, which was moved to costing P&L. And the next entry was production overheads absorbed to WIP, which moved to WIP. And finally, there was sales. So That was 2,56,000. So what does this imply? This implies the total cost you have incurred. Okay. The total cost which you have incurred, out of which 2,56,000 is sold. But since this is all cost and this includes profit, therefore the costing profit and loss account will be credited by whatever the profit. So you add the profit to on the credit side. So what is the costing P&L profit? 48,000. Now, 1,88,750 plus 26,700 plus 77,500 plus 95,200 and plus 48,000. So the total of the credit side is 4,36,150. The total cost and the profit incurred. So this, if entire thing is sold, this would have been the sales. But the sales is only 256. So that means the other cost remains with us. To balance, carried down is 1,80,150. So this indicates that whatever you have incurred, to 4,36,150 together with profit, but if everything would have been sold, then it would have sold for 436,150, maybe more profit. But 256 contains this 48 and the remaining part of the cost which incurred, which has been sold, cost of sales. So what is 180, 150? It is the balance of the expenses which you have incurred, which remain with us either in the form of stores, either as WIP closing stock, either as finished goods closing stock, so on. And the total general ledger adjustment account credit balance is 1,80,150. So this is the closing trial balance that you will have. Let's see, and you can always verify your answers. So what is 1,80,000 remaining with us as 39,175 as stores, debit balance, 1,12,095 as WIP, and 28,880 as finished goods. Find out the total of your trial balance. So this is also 180, 150, right? Yes, the chapter is cost accounting systems, right? So this is how the cost accounting system works. It's very simple if you take it very intuitively and logically. What is happening? You already had raw material in hand. Then you have some part of work in progress and some part of finished goods. So last year, whatever the cost you had incurred was 188,750, which was not sold. Now, in this 53,375, you add another 26,700 of raw material purchased, out of which 40 is issued to production, 900 as factory overheads. So 900 goes as work production overheads and 40,000 goes as stores WIP. Issued to production, issued for factory repairs. Now, supposing in this question, if I am told that the balance of the material lying in hand is only 39,000, what will I do if this figure is given 39,000? It will be my assumption that 175 worth of raw material is lost. You may treat it as abnormal, so you can call it by costing P&L. You have no idea of the whereabouts of the 39,175, out of which 175 you have no idea where it is. So if you treat it as abnormal loss, you can say it by costing P&L. If you treat it as normal loss, it might have evaporated or it is a natural normal waste in the process, then you can charge it to production overheads by production overheads for the 175. So look at the scheme. I'll explain again. First, there was a query, so I'll explain the 25% on factory cost. So profit is mentioned as 25% on cost and sales is given to us. Now, if profit is given 25% on cost and cost is given, it is easy to calculate the 25% profit. But profit is given as a percentage of cost and the figure of sales is given. So what do we do? What is a profit percentage on cost? Reduce it to a fraction. 1 by 4 on cost becomes 1 by 5 on sale. Logically, 4 rupee was the cost, 1 rupee was the profit. So the selling price becomes 5. Therefore, profit becomes 1 on 5. Let's say if the profits are as a percentage of cost, let's say 5%, 10%, 12.5%, 16.66%, 20%, 25%, 33.33%, 40%. These are the general percentages which are given, right? So reduce it to fraction. 1 by 20, 1 by 10, 1 by 8, 1 by 6, 1 by 5, 1 by 4, 1 by 3, 2 by 5, 1 by 2. So this profit as a percentage on cost is this. On sales, it will become, just add the numerator and denominator. 1 by 9 on sales, 1 by 7 on sales, 1 by 6 on sales, 1 by 5 on sales, 1 by 4 on sales, 2 by 7 on sales, and 1 by 3 on sales. Okay. So here in this question, the profit was 25% or 1/4 on cost. So it is 1 by 5th on sales. So this will help you whenever the profit is given as a percentage of cost, but sales value is given, or the profit is given as a percentage of sales, but cost value is given. So from sales to cost, you have to subtract the denominator from the denominator, and from cost to sales, you have to add the denominator. So in this question, sales was given as 2,56,000 and profit was given as 1/4 on sale cost. So it was given as 25%. 25% means 1/4 on cost, equivalent to 1 by 5 of 2,56,000. So that is how I found the profit to be 51,200. But because there was a under absorption of production overheads, which was charged directly to costing P&L, therefore our profit came out to be 48,000. If I had kept the profit as 51,000, right, then this balancing figure would have increased by 3,200. This figure would have increased by 3,200, and there would have been additional account here, production overhead adjustment account debit 3,200. Then also it would have balanced by 183,350. If the policy would not have been to charge the production overheads to costing P&L, but to carry on the adjustment account balance, right? So I hope it is clear. I'll explain once again very quickly. You will have the balances of the four ledgers or maybe five whenever there is a production overhead adjustment account where it is not written off to the costing P&L account. So just simply look at the various accounts. It's very simple flow of activities here. I'll use a different color pen. So you will have the opening balance, and then you will purchase some raw material. This raw material will go to the factory floor or may be used as indirect raw material in production overhead, selling, distribution, or administration. Whatever the balance will be, the balancing figure would be the balance remaining. Else, if the balancing figure is also given, you will assume the difference to be an abnormal gain or loss, or it could be if you assume it to be a normal loss, then you can charge it to a production overhead. The WIP will have an opening figure, then some material will come from stores, and direct wages will also be charged to WIP. Production overheads, if directly charged to WIP, it's okay. Otherwise, they would be generally at a recovery rate. So production overheads are absorbed to WIP. So this is all the cost that you have incurred in this year, including the opening balance, out of which whatever gets completed moves to finished goods, and the remaining is the balancing figure. Finished goods account will have an opening balance. Something will come from WIP, and some part of it will be sold, which will go to cost of sales, and whatever will remain will be the balance. Ensure that three balance CD, stores, WIP, and finished goods, should total up the balance in the cost ledger or general ledger adjustment account. So whatever moved from cost finished goods to cost of sales, so these are the goods which are sold, we will shift them to costing P&L account. Sales is the only case where the cost ledger control account is debited. So the general entry is cost ledger control account or general ledger adjustment account debit to sales. So in sales account, it will come as by cost ledger control account, and this will move to again costing P&L. So costing P&L is credited with sales and debited with cost of sales. If there is any abnormal item which has been written off, will also figure in costing P&L, and the difference will be your profit, which will move to cost ledger control account. So if you look at the cost ledger or general ledger adjustment account, you already had the last year's expenses which were not sold, and then this year you incurred material, you expended on wages, you expended on production overheads, by administration overheads, by selling overheads, and some part of this, all the cost was sold at a profit of 48,000 at 2,56,000. So whatever is there is balance remaining. This balance should always tally with the balances you have already gathered from stores, WIP, and finished goods. So the best part is you can always verify your answer also, and there will all be no problem. Okay. So I was talking about the concepts here. Now, is the flow of material clear? So this is how non-integrated goes. If you have integrated accounts, what will be the difference? The only difference will be that there are no separate books of accounts. But to find out the costing profit and loss, or to find out what is the cost incurred, what is the profit, we need to prepare the same accounts which we have prepared earlier. Stores ledger, general ledger, stores ledger, WIP, finished goods, so on. But only one name will not appear, and that is cost ledger control account will not be written. Cost ledger control account name or general ledger control account name will not appear. So you will keep on passing the same entries, but you will not use these two names. Rather, you will say to bank or to supplier. Okay. There is absolutely, I have doubt in costing P&L how cost of goods sold amount came in finished goods. Okay. So you already had 30,780 worth of goods, and then another 2,02,900 of the finished goods came from the WIP account when they were completed. So they moved from WIP to finished goods. So total you had 2,33,680 rupees of finished goods lying with you, out of which, uh, because of this language, the company's gross profit is 25% on cost and sales is given. So 2 lakh 56, 1/5 of 2 lakh 56 profit is calculated. Profit comes out to be 51,200. That is subtracted from here, which means the goods sold are 2 lakh 4,800. So the finished goods which are sold is 2 lakh 4,800. This comes as a working note. Is it clear now? By cost of sales. And what remains is the balancing figure. In WIP, the balancing figure was given as 7,500 more than opening. So from there, this balancing figure came. And in stores, the balancing figure was of closing stock. Okay. So in all the three situations, uh, you have to completed the stores ledger WIP finished goods in three different ways. Stores ledger, very direct method. Whatever remains is the balancing figure of closing stock. In WIP control account, the balance CD is given as 7,500 more than the opening. Therefore, the balancing figure comes out of what has been transferred to finished goods. And in finished goods, neither the balancing figure was given, neither the cost of sales was given, but information was given that profit is 25% on cost. And the figure of sales is given. So 25% on cost is 51,200 less. So 2,04,800 worth of goods are sold. Is it clear now? So 2,04,800 worth of goods are sold, which moves to costing P&L account. And sales is given. So your profit should be 51,200. But remember, the production overheads was under recovered, which was written off to costing P&L. Therefore, our profit comes out to be only 48,000. Cost of sales would be debited with finished goods and credited by costing P&L. Sales account would be credited by cost ledger control account and debit the in sales we will debit the costing P&L. Okay. So integrated is almost same. Everything is same. Just don't use the name cost ledger control account or general ledger. Instead use to bank or to supplier. Let's take one interesting question, which is again based on non-integrated. A fire destroyed some accounting records of a company, and you have been able to collect the following from the spoilt papers records, and as a result of consultation with accounting staff in respect of January 2025. So these are the incomplete ledgers which you have. So you have the opening balance of raw material, 32,000. Indirectly, you have the raw material account or the stores account. Raw material account, you have the brought down balance as 32,000. Any other information? No. Then you have the WIP account, which has opening. I will wait. Then you have the WIP account, where the opening is given as 9,200 and Movement to finished goods, 1,51,000. So in raw material, we only know what is the opening figure. In WIP, we know what is the opening and then how much moved to the finished goods account. Then you also have creditors, implying that it is a integrated system of accounting. Here you have brought down 16,400 and closing also. So opening and closing is given, nothing else. Then you have a manufacturing overheads account or production overheads or manufacturing overheads account. I'm writing the short names because of constraint of time. So amount spent is 29,600. What is the general entry you do when you incur an expense? Overheads account debit to bank. So you have this filling figure as 29,600. So this is all you have, and there is missing information. You also have one more account, which is finished goods account, opening 24 and closing 30. So I'll take the finished goods account here. Opening balance was 24 and closing is 30. To balance brought down 24,000 and by balance carried down 30. But remember that we had how much units moving to finished goods past this entry. Okay, done. Whatever the information was there with us, we have prepared the accounts and completely pasted everything, whatever we knew. Now, additional information will help us to find out or to complete these records. Cash book showed that 89,200 has been paid to the creditors for raw material. So when you make a payment to the creditors, what is the general entry? Creditors to bank. Okay. I will use a different color pen now. Whatever the information was there, I have simply pasted it in the various accounts. Now I start doing my working. So 89,200 has been paid to creditors. First entry. Now what does the creditor account have? A creditor account has the opening balance and then purchases. Okay. And then something is paid and something remains as closing balance. So I think this is complete. Therefore, purchases becomes the balancing figure here, which comes out to be 89,200 plus 19,200 minus 16,400. So you have made a purchases of 92,000 and this account closes. This purchases of 9,200 is of raw material because creditors come when you purchase raw material. So to creditors account. This is pasted here. Right? Let's look at other information. The ending inventory of WIP. Now closing WIP closing balance is given. It's not given directly. It says it comprises of material 5,000 on which 300 direct labor hours have been booked against wages and overheads. So WIP has elements of material, wages, and production overheads or simply overheads as written here. The job card shows that workers have worked for 7,000 hours at the rate of 10. Okay. So WIP has 7,000 into 10 as wages control account. So 70,000 is also incurred as wages in the WIP. Wages are directly applied to WIP. Okay. Now we say that since out of 7,000 workers, 300 labor hours is like a closing stock of WIP. So 300 into 10, 3000 is the wages incurred on the closing stock of WIP. Then overheads are also charged to the WIP. Overhead recovery rate is 4 per labor hour. So 7,000 into 4 is the overheads also, 28,000. Out of this 7,000 hours, 300 is spent on closing stocks of WIP. So 300 into 4, 1,200 is the closing WIP production overheads or overheads on closing WIP. So total value of closing WIP is 9,200. So this can become your working note carefully, not in the form of account, but in the form of statements. So WIP will be debited with 70,000 of wages, 28,000 of production overheads, and 9,200 of closing WIP. So 70,000 of wages, 70,000 is wages, 28,000 is production overheads, and closing is 9,200. By carried down is 9,200. Now, what does the WIP account generally have? It has opening balance, then some material comes here, then some wages are incurred, and then some overheads are recovered. This is the debit. On credit, something moves to finished goods account, and the balance remains as carried down. So we have everything, finished goods carried down, brought down, wages, PO. What is missing is material, the raw material account. This will become your balancing figure. So what is the figure of raw material? 1,51,000 plus 9,200. Credit total is 1,60,200 minus 9,200 minus 70,000 and minus 28,000. So 53,000 worth of goods have moved from stores or material to work in progress by WIP 53,000. This is again the balancing figure. This is moving here. Now, you know that you had an opening balance and you purchased some material out of which this much was issued. What will remain will be the closing or balance carried down. So you had 92,000 worth of goods purchased and 32 already lying with you. So total was 1,24,000, out of which 53,000 is issued. So you have a closing balance of raw material as 71,000. This also completes. Okay. So your raw material account is complete, WIP account is complete, creditors account is complete, and manufacturing overheads incurred are 29,600, but recovered is 28,000. So by costing P&L, you can by P&L account, the difference 1,600 can be charged to profit and loss account. So this account will also get cancelled or complete, closed. Finished goods account is also, let's see, complete or not. Yeah, it's not. So finished goods to balance, you already had this much. Then from WIP, this moved. Okay. Yeah, that's it. So this will be by cost of sales. So 1,45,000 worth of goods have been sold. Okay. You are required to complete the above accounts in the cost ledger of the company. So it is integrated, but costing department is picking up its relevant information and then completing its accounts of raw material, WIP, finished goods, manufacturing overheads, and creditors. Great. When you have questions on missing figures, first important thing is prepare all the accounts and paste whatever is given. And then one thing will lead to another one by one. So just to ensure that whenever there is a double entry, you are posting the double entry in both the places. Okay. You will not miss this type of questions at all then. Okay. Thank you. Now we talk about integral system of accounting. Let's take up a question on integral system of accounting. You are required to pass the journal entries for the following transactions which take place on 30th June 2025. Raw material purchased 6 lakh, 50% on credit and 50% cash. Material issued to production. Wages paid, out of which 50% direct, 50% indirect. Wages charged to production 1 lakh. Now this information was not required. Wages charged to production. Indirectly, this is a direct, implies these are your direct wages. But already it is mentioned that wages paid 2 lakh, which is 50% direct and 50% indirect. So 1 lakh will move to WIP and 1 lakh will move to production overheads. We are aware. So this is a redundant information, wages charged to production. As such, from this 50% also, this makes sense and complete here. Factory overheads incurred 80, charged to production 1 lakh. So there is a over recovery this time. Selling and distribution overheads incurred 40. Finished goods at cost are 5 lakh. Sales 50% credit. There is no closing stock. Receipt from debtors and payment to creditors. Team, if you want to break, we can take it now for 10 minutes. Okay? We'll start this question after you come back. All right? So you can have your 10 minutes break. account in All right, team. I hope all of you are back. Can we start? So this question says Tata Enterprises operates an integral system of accounting, and you're required to pass the journal entries for the following transactions. First one is material purchased 6 lakh, 50% on credit. So what journal entry would the cost accountant pass? Narration is not required. Material control account debit 6 lakh to bank and to creditor. Half of it is paid in cash, half is on credit, right? Second entry, material issued to production. What will be the journal entry? Work in progress debit to material control account or stores account. 4 lakh. So there was raw material of 6 lakh, out of which 4 lakh has been moved to the production on factory floor. Wages paid 2 lakh, 50% direct and 50% indirect. So we'll pass one entry. Direct will move to WIP, indirect will move to production overheads, and they have been paid. Or you can pass two entry, wages to bank and WIP to wages 1 lakh and production overhead to wages 1 lakh and total 2 lakh. So you can bifurcate this into two different entries also by introducing wages to bank and then passing the entry for WIP debit and PO debit to wages control account. Okay, you can do that. Fourth, production overheads incurred 80,000, which is production overheads to bank 80,000. But there is a over absorption. So over absorption or recovery is WIP to production overheads 1 lakh. Factory overheads incurred. So the journal entry is production overhead to bank. Factory overheads charged to production. WIP debit to production overheads. Selling and distribution overheads incurred. The journal entry would be selling and distribution overheads debit to bank. As no recovery rate is given, we will transfer the selling and distribution to cost of sales account. So we'll assume no under or over absorption. So selling and distribution is 40,000, no under absorption and no over absorption. Which moves to cost of sales completely. Next is finished goods at cost 500,000 and there is no closing stock. So finished goods debit to WIP, and it is saying there is no closing stock of finished goods. Therefore, cost of sales debit 500,000 to finished goods, right? Sales is 7,50,000. What is the entry for sales? And it is debit or credit? 50% credit sales. Bank account debit 3,75,000. Debtors debit 3,75,000 and two sales 7,50,000. Bank debit, bank to sales and debtors to sale. 50% is credit. There is no closing stock. Then there is the entry for receipt from debtors and payment to creditors. Bank to debtors and creditors to bank. These two entries will also be passed. 2 lakh each. So this will be the scheme of journal entries. If you are required, they ask you to prepare the accounts also. You will see that your stores had 6 lakh, out of which 4 lakh is issued to production, and therefore there is a balance of 2 lakhs. This is material. You can prepare a wages control account. You will see that wages to bank 2 lakhs, by WIP 1 lakh, and by production overheads 1 lakh. Factory overheads incurred. You can prepare a WIP account. There is no opening balance. So material has come for 4 lakhs. Wages have been incurred 1 lakh. Factory overheads charged to production is again 1 lakh. And finished goods moving from here is 5 lakh. Therefore, you have a closing balance of 1 lakh in WIP. Finished goods account, opening balance is 5 lakhs. No closing stock, so cost of sales. So you receive 5 lakh from WIP, which moves to cost of sales completely. Then your sales is 750. And if you prepare a profit and loss account, you will see sales is 7,50,000. And in the cost of sales account, you will have two finished goods, 5 lakh, and you will incur selling and distribution overheads, 40,000. And this will also move to Costing P&L 540. So by P&L, 750 will be the sales and cost of sales will be 5,40,000. So 2,10,000 might appear to be the profit, but there is one issue here. Production overheads, which is 1 lakh of wages and 80,000 of factory overheads incurred. So production overheads are incurred 180, but absorbed is only 1 lakh. So there is an under absorption. So 80,000 that if is charged to costing P&L to pay a profit and loss account, then your profit will further reduce to 130 only. Okay. So if you want, you can prepare all the accounts also. Okay, I will allow you to take screenshots. So we will quickly scroll down the session. One simple question now. Past journal entries in the books of cost accounts maintained on non-integrated system for the following. Raw material issued, direct 550, indirect 150. Allocation of wages, direct 2 lakh, indirect 40,000. So I think it is easy to pass these journal entries now. For direct, it will be WIP to stores ledger. For indirect, it will be production overhead to stores ledger. Allocation of wages. Wages control account to cost ledger, 2,40,000. WIP to wages control account, 2 lakh. And production overheads to wages control account, 40,000. So 1,90,000 is total production overhead incurred so far. Then there is an under and over absorption of overheads. So factory overheads are over absorbed by 20,000. So when you incur an expenditure, this is the entry in non-integrated. And when you recover it, this is the entry, WIP to PO. So if this is X plus 20. Okay, 20,000 more. That means your credit figure is more. So you must debit the production overhead for over recovery and you will charge it to costing P&L account. Administration overheads are under recovered. So you will have costing P&L account debit to administration overheads. Okay, this is by 10,000 and this is by 20,000. The next topic for today will be the reconciliation. These things will be very helpful there. Why? Think about it. When there is a over absorption, it means you have booked higher expenses, which means your profits have unnecessarily come down. So you must increase the profits. And you increase profits when you credit it. Similarly, if there is an under absorption of expenditure, it implies that the expenses are further more than what they are. Why was the wages of 1 lakh absorbed? 1 lakh absorbed wages. Where? In the previous question, I'll come back to that. So if there is a over absorption, unnecessarily the profits have come down. So you rectify it by increasing the profits and crediting the profit and loss account. And if there is an under absorption, unnecessarily the profits have increased because you have not charged all the expenditure. So you must decrease the profits and debit the costing P&L account. 1 lakh of wages were charged here. This is what your question is. Why was the wages of 100,000 absorbed? Wages which are direct will be absorbed to work in progress, and the ones which are indirect will go to production overheads. All right. Here are another question which is based on reconciliation. But before taking up the reconciliation directly, let me take the concepts of reconciliation. So reconciliation figures when you have separate books of accounts. So you have also prepared a costing profit and loss account under the non-integrated system, and you also have a profits as per cost books. And then you have financial profit and loss, which is profit as per financial books. So it is the same organization, same entity doing the same business and keeping all the records, whereas the costing people maintain their separate records and financial people maintain their separate records. The costing team will also give you a profit, which will be as per the costing P&L account, and the financial accounting team will also give you a profit, which will be as per financial books of accounts. Yet, despite recording the same business transactions for the same entity for the same period, it is possible that the costing profit and loss is different from financial profit and loss. So, what are the reasons why the difference will emerge? So, there are some very common reasons under costing and financial profit and loss. One, there are certain items which may be of purely financial nature. So they will figure only in the financial books, and there will be no role of them in the costing P&L account. This could be in the expenses side. In the expenses side, it could be provision for bad debts, or even bad debts, interest on loans. These are purely financial nature. Dividends paid, if it is profits after appropriation. Writing off goodwill, or amortization of intangibles. All these are purely financial expenses. They can also be incomes like dividend income, interest income from investments, any other rental income, or any other income which is away from your normal business. Similarly, there can be some items which are purely of costing nature. Here, the one prominent one that I see as an expense is notional expenses. So costing may allow a notional rent. Financial accounts never allows any notional payment to oneself. So this is one major reason that there can be some items of incomes and expenses which are either purely of financial nature or purely of costing nature. Second is, we have very well seen so far how we value the stocks. In costing, remember we have covered the material costing where we have seen that there are different bases by which you measure your stocks. It could be FIFO, weighted average, or any other method. Whereas in finance, Stocks are valued at cost or net realizable value, whichever is less. So value of stocks are calculated differently under both the systems. Therefore, the stocks may be overvalued or undervalued. Right? So another difference that erupts is the second one is because of the difference in the way we value the stocks. So whatever is closing stock becomes the opening stock for the next period. So therefore there is a difference. Third reason is we have seen that overheads are absorbed on some basis on predetermined rates. In costing, whereas in finance, actual overheads are debited. So there can always be undervaluation, under absorption, or over absorption, which can give different profits under costing and financial books. So majorly these are the three main reasons. Now, if I look at the questions, what can happen is costing profit is given and financial profits are also given. You have to reconcile. This becomes very simple because in this, if you make any error, you will automatically catch up. You will know that your figures are not matching. That means you've done something wrong. Second is maybe financial figures are given plus information is given. And first you have to find out the costing profits and then you have to reconcile. In this, if you have wrongly calculated the costing profits, you will not be able to find out that you have done some mistake. Third, only information is given and you prepare the financial profits also you calculate and costing profits also you calculate and then you reconcile. So when financial profits and information is given, it can also be costing profits and information is given to prepare the financial profits first. So best will be this for you if this is given. This is absolutely not a problem because any error will be detected there and then. Uh, Whenever there will be losses, you will do the opposites, but uh, we will not take, we'll take the losses in the negative, in which our method of doing the reconciliation will remain the same. So following figures are extracted from the financial accounts of a company as on 31st December. Sales is of 20,000 units, material, wages, factory overheads, administrative overheads, selling and distribution overheads, finished goods, and then there is work in progress of 1,40,000, goodwill written off, interest paid on capital. In the costing records, factory overheads are charged 100% of wages, administration overheads are charged 10% of factory cost, and selling and distribution overheads are charged at the rate of 20 per unit sold. Prepare a statement reconciling the profit as per cost records with the profits as per financial records. So if you look at this, we have to prepare both all the things. We have to prepare a profit and loss account as per financial books. And we have to prepare a cost sheet or costing profits as per the cost records. So this will have sales, closing stock. This will have material, wages. This will also have closing stock of finished goods as well as WIP. Then there are factory overheads, administration overheads, goodwill written off, selling overheads, and interest on loan. As far as I can remember, these are some of the items. Here you will have material and wages. There are no direct expenses, so this will become your prime cost. You will add factory overheads to this. This will become your factory cost. You will add administration overheads to this. This will become your cost of production. You will subtract the finished goods from here. This will give you cost of production of goods sold. Then you will incur selling and distribution overheads. And this will be your cost of sales. And finally, there will be sales. So in between, you will have the balancing figure as profit. So sales is 20,000 units, 50 lakhs. Materials, 20 lakhs. Wages, 10 lakhs. Factory overheads, 9 lakh, 5 lakh 20,000 and 6 lakh, 3 lakh 60,000. 9 lakh, 5 lakh 20,000 and 3 lakh 60,000. Finished goods, 3 lakh, 1230 units. And WIP, 1 lakh 40,000. Goodwill written off is 4 lakhs. Interest paid on capital is 40,000. So you have calculated your profit as per financial books. Just no other information is related to financial records. Okay. So first complete this. 54 lakhs 40,000 and 30 lakhs. So 24 lakh 40,000 is your gross profit. When you have the gross profit as 24 lakh 40,000, from there you subtract 9 lakh of factory overheads, 5 lakh 20,000 of administrative overheads, and 4 lakhs of goodwill written off, 3 lakh 60,000 selling and distribution overheads, and 40,000 interest. So you're left with financial profits of 2 lakh 20,000. Okay. Let's start with the cost sheet. So material is 20 lakhs, wages are 10 lakhs, prime cost is 30 lakhs. Okay. Factory overheads are charged at 100% of wages. So another 10 lakhs. But here you will also subtract the WIP closing stock, which is 1 lakh 40,000. So your factory cost comes out to be 28 lakhs 60,000. In the costing records, factory overheads are charged at 100% of wages. Administration overheads are charged 10% of factory cost. And selling and distribution at 20 per unit sold. So 10% of factory cost we will add. 2,86,000. So your cost of production becomes 28,60,000. 30 lakhs plus 10 lakhs, 40 lakhs, sorry. 20 lakhs plus 10 lakhs. 30 lakhs is your prime cost. Add factory overheads, which is 100% of wages. So another 10 lakh. 40 lakhs minus 1 lakh 40,000 as WIP. So it is 38 lakh 60,000. 38 lakh 60,000. And 3 lakh 86,000 would be the administration overheads. So this comes out to be cost of production is 42 lakh 46,000. Okay. Yeah, 3 lakh 86,000, 3 lakh 31 lakh 46,000 is the cost of production. 42 lakh 46,000. Now this 46 lakh 42 lakhs 46,000 is the cost of production of 21,230 units. Okay. This is the cost of production of 21,230 units. So we'll prepare a working note. Cost of production per unit. Forty-two lakhs 46,000 divide by 21,230 units. So the cost of production per unit is 200 rupee per unit. Therefore, the value of finished stock, closing value of finished stock, 1230 units at the rate of 200 rupee per unit. The value of closing stock of finished goods is 2,46,000. So subtract the value of closing finished goods, 2,46,000. So cost of production of goods sold comes out to be 40 lakhs. Add selling and distributions at the rate of 20 rupee per unit, right? It sold. So 20,000 into 20, 4 lakhs. So total cost of sales comes out to be 44 lakhs. And the sales is 50 lakhs. Therefore, the balancing figure of your profit comes out to be 6 lakhs. Okay. So we have prepared the cost sheet and we have prepared the financial books. So profit as per cost sheet is 6 lakhs and profit as per financial books is 2,20,000. So let's reconcile from cost profits to financial profits. Okay. Profits as per cost books plus 6 lakh. From here, we will reach to profits as per financial books. Two lakh 20,000. So what do we do? Number one, remember there were two, three difference. Number one, there was difference in value of closing stock. Number two, there was difference in absorption of overheads. Here we had factory overheads or production overheads, administration overheads, and selling overheads, all the three overheads. Then there were some purely financial items like goodwill written off, and interest on loan. So I think these were the only differences. First, let's take up this. The value of finished goods is 2,46,000 in costing, whereas it is 3 lakh in financial. Okay. So closing stock is overvalued. And what will you do for that? Add overvaluation of closing stock. By how much? 246 and 3 lakh. So this is overvalued by 54,000. So this is the add item. Then overheads absorption. Factory overheads 9 lakh. Factory overheads 10 lakhs. So in cost books, they are over absorbed. It is not necessary to make profits as per financial records. This I'm going from costing to financial. Add over absorption of factory overheads by 1 lakh. Administrative overheads. It is 386. Here it is 520. So administrative overheads are under absorbed in cost accounts. 5,20,000 minus 386. Minus 134. 386 and 520. Okay. Selling 360, selling 4 lakhs. Selling expenses are also over absorbed in costing. Three sixty and 4 lakh by 40,000. Then there is purely goodwill, purely financial matter, and interest on loan. So purely financial expenses are to be subtracted. 4 lakh and 40,000. Minus 5 lakh 74,000 and plus 1 lakh 94,000. Just check for the answer. 6 lakh minus 5 lakh 74,000 is 26,000 plus 1 lakh 94,000. So you get 2 lakh 20. Okay. To remember this, I'll help you with this. Absorption of overheads is always checked in costing accounting, cost accounts. Absorption is in cost accounts, so always check that. And value of stocks is checked in financial books. Stocks value in financial book. Now, there can be confusion in exam whether under absorption is added less or over absorption is added. So just remember what comes first, under or over absorption, what comes first in dictionary? Over absorption or under absorption? Which word will come first? Over absorption. O. And amongst add and less, what will come first? Add. So add if there is over absorption. And similarly, subtract under absorption. Okay. Similarly, what comes first in dictionary? Add or less? Add. What comes first? Overvaluation or undervaluation? Overvaluation. What comes first? Opening stock or closing stock? Closing stock. So add overvaluation of closing stock. So if in your financial books, closing stock is more, add to. And this is when you're moving from costing profits to financial profits. Only then. So you can remember one thing only. Always move from cost to financial and always keep it positive. So if there is a profit, it is plus, and if there is loss, show this figure in minus. And then this rule will apply in all circumstances. So even in exam, if you are supposed to reconcile from financial to cost, quickly calculate from cost to financial, keeping these rules. And then when you are fairly doing your solution, you can reverse the positions. Okay. Now with this only, if you are adding the overvaluation, you will subtract the undervaluation, right? You will do the opposite. If overvaluation is added, undervaluation must be subtracted off closing stock. And if closing stock overvaluation is added, opening stock's overvaluation will also be subtracted. And if opening stock's overvaluation is subtracted, opening stock's undervaluation will be added. Logically also, when closing stocks are more in financial, profits will be more. So you have to add. But just in case you don't get any confusion in pressure or in exam time, you can do this. So that is all. Thank you. And I can quickly take you through the slides so you can take the screenshots. I'll move quickly, so please take note of that. I hope you've taken the screenshot. Moving to next. The questions and assignment of this I have already shared with you, plus some theoretical notes. You can find them in the BOS portal. All right, students, thank you so much. I hope this was fruitful to you and you have understood all the concepts properly. Thank you. Any other doubt or query? All right, thank you so much. Uh, so we can call it a day.